Hi, trading and profit and loss account. When a combined statement of factory revenues and expenses, along with outside factory income and expenses of the same company, needs to be combined, we use a different format and it is called trading and profit and loss account. It has two sides, debit and credit. The statement is divided into two parts. The first one is upper part. Upper part is for factory revenues and expenses, and difference of both will bring gross profit or gross loss. The lower part, gross profit or gross loss, then after brought down to next part. In case of gross profit, it will be placed on credit side and gross loss will be placed on debit side. Let's look at the format first and record a few transactions in it. As you would see the format, the upper part is for the factory revenues and expenditure, and the lower part is outside the factory expenses. The opening inventory stock, the purchases less purchase return, the wages of the factory, carriage in, electricity of the factory, and the sales minus sales return, which will be the net sales and the closing stock. Now, sales minus all the expenses will be the gross profit or gross loss. Here it's the gross profit, which is brought down $62,900, and against it all other expenses other than factory are put it here: office rent, staff salaries, office electricity, transportation, selling expense, etc. And there is a net profit of 30,000. As we know that all transactions will have two effects. In this statement, you would notice that there are two transactions having only one effect each, as they did not come through accounting books. These are outside entries, but the second effect will also be recorded. First, we come to know of these single effects here. Outside transactions. The first one is closing stock. Closing inventory is calculated at the end of accounting period, which is deducted from total available goods. That it is not a part of cost, that's the reason it has been placed on credit side. It's the second effect on debit side, goes in the balance sheet as an asset. The second one is net profit. In this statement, the net profit has been placed on debit side to balance the final total. The same net profit will be credited in balance sheet under capital account, as capital will be added with net profit amount. Thank you.